Profit and loss, cash flow. You've probably heard both terms 100 times, but what's the actual difference? Today I'm going to explain the difference between your P&L and your cash flow in plain English, and why both matter if you run a business in the UK. Let's start simple. Your profit and loss, or P&L, also called your income statement, tells you if you've made profit on paper. It shows your income minus your expenses over a specific time period, usually a month, quarter, or year. Your cash flow tells you what actually happened in your bank account. It's about real money, in and out, regardless of when it was invoiced or earned. So here's the simplest way to remember it. P&L is what you've earned, and cash flow is what you've got. And sometimes those two are very different things. Let's say you're a freelance graphic designer. In January, you invoice 3 clients for £1,000 each, pay £500 in software and subscription, buy a new £1,000 laptop, and on your P&L, it looks like this. If 2 of your clients don't pay until February, your cash flow in January might only be cash in £1,000, cash out £1,500. Net cash flow minus £500. So you made a profit on paper, but you're actually in the red in real life that month. And that's why cash flow is the one that keeps you up at night, even if your P&L looks great. So many UK business owners get blindsided because they only ever look at one of the reports. They think, my accountant says I made 20k profit, so why do I feel broke? And the answer is usually you haven't been paid yet, you paid for bid stock up front, you forgot about tax or VAT bill, or you're reinvesting profits faster than you're collecting cash. That's the disconnect. P&L helps you plan for tax and profitability. Cash flow helps you stay alive. Here's how I recommend thinking about it. Use your P&L to see if your business is viable. Calculate taxes and estimate profit. Make long-term decisions like pricing and hiring, and then use your cash flow to avoid running out of money, decide when to pay bills, know if you can afford to take time off or invest. Pro tip: if you're VAT registered or pay yourself via salary and dividends, your cash flow timing becomes extra important. HMRC doesn't wait just because your client hasn't paid yet. You don't need to overcomplicate this. You can track both using cloud software like Xero or Pre-Agent, a simple Google spreadsheet, or even Notion if you're spreadsheet shy. If you're doing it manually, I recommend one tab for monthly income and expenses, your P&L, one tab for cash in and out by week. Your cash flow consistency matters more than perfection. So now you know the difference between your profit and loss and cash, and why both matter in your business. If you found this helpful, hit subscribe. I share weekly, plain English video for UK business owners who want to understand their finances without feeling judged. Let me know in the comments, do you track your P&L and your cash flow? Or just check your bank balance and hope for the best?